Hey folks, good afternoon. June 25th, 2020, 3:44 Central, 4:44 Eastern. Let's kind of review what we said on Sunday. We basically said that we will continue in a nested B formation from the larger B that ended on June 16th without exceeding 3059.9. And that pretty much held true. We achieved 3056.8, so roughly 3 points lower than the previous B. So this gives credence to the fact that this was the A down. We're currently in finished the large B here and forming a nested B here. And at this point, uh, from a traditional Elliott wave sense, once we log this third nested B, hopefully between 9:15 tonight or tomorrow, we should be nested at 3 degrees. And when you get nested at 3 degrees, you basically get a sharp move or also a crash, you know. So if we did not have the tools we have, such as the timing calendar and the CITs, we should really be freaking out like most people who think we're in the bear market are frozen into inaction. But we were able to take the risky longs. We went from 3017.8 to 3091. So that's a gain of 74. Of course, our entry was around 3026 on the ES. Last night, if even if you took the CIT overnight at 10:33. So with slight drawdown, we're still okay. So so that's what we're looking at, formation of third nested B. And after that, really speaking, we shouldn't be messing with the long side unless you know what you're doing. So I just wanted to share that with you. And I had mentioned that 45 is poised over 360-degree cycle, and then the 90 is slanting downwards and still stays below the purple line, which is the 360. That is not a good condition. And I've been saying this for almost a month. This is what the market is trying to alleviate. The typical reaction is you actually get a retest of this downward sloping line, and that currently is passing at 2856.7. Um, I think that's, and 2870 is what we get from A equal to C. So somewhere around there we should get our traditional C wave lower into July 7th. July 7th is the midpoint of two major turning points. July 4th, which is obviously a holiday, and July 7th is the first trading day after the 4-day weekend in US. And from the timing calendar, we can see that 11th is really when the market can expect to start moving higher. And oh boy, it seems like a ballistic bazooka move coming here from July 11th. So, wanted to show that the blue line basically shows the truncated scenario where we basically retest the 360. I have shown the relevance of 360 to you folks several times. And this pretty much is the defining line between bull and bear. And, once you're below this line, the markets are in the grip of a very high degree wave, as in here. You had A and a B bounce from here, but once you got down below here, that was 29, roughly 2917, then all hell broke loose. And recall, this market was being held by 2911 on the way back up, and 2911 is also the May mob from where the market took off. So in essence, we may breach 2911, but in essence, market is retrying to, it's like retesting that major pivot at 2911, give or take a few, and then continue upwards. So just wanted to show that very quickly. And we said 3016 is the June mob, it should hold, and cycles were showing we should move up. This CIT was inverted. We showed that yesterday, and I called out a caution that we are now in the grip of inverted waves. So extra care is required with your positions. So don't leave them without stop. Um, and if you look at it, basically the midpoint is 24th night. This low came in 24th night. Now we kind of seem to be back on track with the 25th moving higher into after hours, and then starting 26 we start to drop, and after this we don't really have a peak. And 24th was the highest intensity CIT here in second half of June, so this should simply be a retest. This is not higher than this. This is gonna be a lower retest. So how it pans out, maybe a triangle formation here, downward sloping, and a break next week from that B wave, the third degree B wave. So, and then the final crash lows, and both 4 and 7 are same intensity. So might as well enjoy the weekend and come back on 7th to start accumulating is the current thinking. There will be seemingly a large gap higher or a large move here, as we can see, then a retest, then something like this, and then boom. Okay, so that's that from timing calendar. We're at touch and go point, and let's look at the technicals. On the monthly VIX cycle, we closed below the bull bear mob at 3108.6. So we are in the grip of bear cycle right now. So do not forget that. And of course, our current position is long into 915. Looking at the dailies, we closed today. We closed below the bull bear mob on the daily cycles, and but if you look at tomorrow's candle, the mob is at 3064.43. We're above it. 3071 point NN, which you can verify from the Nichen model, what the NN, the second two decimal places are. That literally is the support. And if we get down below 64.43 through 71, then market's already on its way down. But the most likely action is that we're gonna move towards 3113.87, and I would also give it the midpoint between 0.382 and 0.618. I think the midpoint is at 3129 cash, so 3117 on the ES. I think that's kind of the highest extent of the recovery if we do manage to get there. There was a small top right past the close, and so we could churn, but there could potentially be a huge spike because uh, from the neurals, it doesn't seem like the upside is done. Okay. Looking at Michan, we pretty much knew that recovery is on the card. I specifically said, do not think you can keep your short profits. Shorting is hard. Keeping short profits is even harder. So, and, lo and behold, we're here. We printed 3091 already. So, and so the hourlies came on buy, but the dailies remain on sell. So that's one thing to remember. And then we have 3071.02 as the weekly monthly midpoint pivot, which kind of controls the downside for now. The pivot below that is 3043.76, and I'm sorry this is hidden, but the pivot above is 3098.27. So as long as 3098.27 is holding, we cannot expect market to go and hit the aforesaid 3113.87 through 3129. So we do need to clear that zone. um, here, and looking at the SSG or the SmartP strategy grid, which includes Elliott Wave's model and many other things. It's kind of a amalgamation of many things. Once again, hourlies are on a buy. They gave a target of 3090.71, and actually, if you look at it, and this is how minute things can get. Once we closed, we actually printed 3091. So we exceeded this, which now starts pointing to 3093.62. And if that is exceeded, then market is headed toward 3119.32 for one final retest of the sell on dailies. Um, yeah, so hourlies are on buy, but dailies is on sell. So broadly speaking, we can say the range between now until tomorrow, so next 24 hours, is roughly this pivot and this pivot. Of course, give or take a few, 10 points here, on the high side, maybe 10 points here on the low side. So that's that. Here's some more stops for the long positions. Here's another one, which is equivalent of 3071 roughly. So how could it potentially shape out? I can think of two scenarios. Once again, the wave is inverted, and the reason we know that is here's 8 a.m., which I believe Neil called in the chat even before I arrived in the chat. He had put that out there. This was a low, and boy, what a low it was, right? It gave us 60 plus points. So now if you look at it, this is moving up now and should remain up. There is an intersection, but intersection typically means the hourly invert in favor of the larger wave, which would mean that at some point this evening, you could look up in the Excel, this point will actually turn up in the direction of the daily wave going higher into 9:15 p.m. EST. Easily the yield from this point is going to be 50 ES is what I said on Sunday, but I think it's more like 60 plus ES from here. The alternate would be somehow we crash and burn for a retest low into 9:15 and then remain stuck up rest of the week. And so that's kind of the yellow alternate. In both cases, for this week, I do expect we get up to 3120 ES roughly, which is 30, 31, 29, 32, whatever, right? So somewhere around there because the inversion occurred here. So the inversion point is what gets tested. So I think we get up to this point, not all of this surplus. And then here's the 60 ES that I can spot. This roughly is 31, 44, 48. This is 30, 84. So like 64 ES from for the blue line. So that's kind of the update, and I think high side remain. Just strictly use your stops at any rate, and if you don't like where we are, you can always profit out. I personally profited out at the spike into the close. I closed some of the positions. Rest are now guarded against 3059 ES. So, and I'm trying to ride into 915 if I see this to be a perfect low. Remember when the way you evaluate CITs is for the dailies, you evaluate the trend of the hourly closes into the CIT like this, right? On the sorry, that was on the dailies. You evaluate the hourly closes. On hourlies, you should look at the minute level. So literally 1 degree below to ascertain the CIT. But overall, you should still pay attention to what the hourly closes look like compared to the neural. So that's the update, and good luck, maintain stops, and I will see you on the board.